I face a grim choice. Do I continue to dilute and spend money on this project, or spend as little as possible and hang on for dear life through the bottom of the market cycle? I always knew that we have a real asset that's capable of producing class one nickel. Who's our competition?
I'm looking at the market cap and going, that's a low market cap for a resource of that size. That says to me the market is not sure if you can get into production. So can you? We asked the question, in a tough financial market, should mining companies hunker down and weather the storm, or should they work their way through the cycle? Find out what this company decided to do by watching our video. We spoke earlier today to Mark Jarvis. He's the CEO of Giga Metals. They're a nickel explorer in Canada. We talked to him about their resource and recovery rates, their infrastructure costs and challenges of working in a semi-rural district, investment red flags and fundraising. Plus, we get a sense of timing on their PEA update due sometime around Q1 next year. If you want to look at any of these topics, look in the description below, click on the relevant timestamp. That'll take you to that part of the video. And if I could ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And if you do want to see more videos like this, click the notification bell. Let's hear what Mark had to say. Hi Mark, how are you?
I'm very good. Thank you, Matthew. How are you?
Good, thanks for joining us. I think nickel's a very hot topic at the moment, so we're pleased to be speaking to you about it. So could you kick off and give us a 1-minute summary on the business, and then we'll get stuck into some questions.
At Giga Metals, we've got the Turningen deposit, which is among the largest undeveloped sulphide nickel deposits in the world. And sulphide nickel is one of the two types of nickel that are amenable to being upgraded to class one nickel, which is useful for batteries, for lithium ion batteries. And in fact, a lot of people think that nickel is going to be the choke point in terms of material supplies for lithium ion batteries.
It's very topical at the moment, the EV story. We're hearing a lot of companies trying to align themselves to the EV revolution.
Sure.
And tell us that they're gonna be a big part of that success. But I'd be interested to understand a little bit about yourself. How did you get into this project? How did you discover it? And tell us a little bit about the team that you surrounded yourself with.
I was introduced to this deposit. I was actually retired. I had made an excellent pass in an oil company that I was involved with called Ultra Petroleum, which at the time went from 35 cents a share to $150 a share. It was a remarkable story.
Wow.
And I spent a couple of years retired, and I was bullish on base metals in 2003, 2004. I was right. Base metals were doing very well. And a broker showed me this company, which was the stock had been suspended. It was run by pump and dump artists type of thing, but it had an interesting and very large deposit. It wasn't drilled out though. And so I got involved, replaced the management, and raised a bunch of money. We caught the end of the last market cycle, raised a lot of money and drilled this deposit off. So our deposit is now defined by 240 drill holes, and they're probably averaging 350, 400 meters, on average. So a lot of drilling to define a large deposit like this.
Right.
And when I say large, in the measured plus indicated category, we've got now 5.2 billion pounds of nickel and 313 million pounds of cobalt. And then in the inferred category, double that.
Yeah. So that's exciting times. But let's stick with the team first. So you're an oil guy. You've come into base metals. Who have you surrounded yourself with to kind of give you the comfort of knowing what you're meant to be doing?
Well, we've recently attracted some very interesting board members. One is Martin Vidra, who spent his career at Sherritt, which is a Canadian nickel and cobalt producer. People in the U.S. don't know much about them because their primary asset is in Cuba. And so the executives are not allowed to travel to the United States, but they're well known, everywhere else. And a guy named Robert Morris. Bob was the head of international base metal sales for Vale, which is the big Brazilian company. It's actually the largest nickel producer in the world now. And so Bob also knows all of the end users, and in fact spent time living in Tokyo. In his earlier incarnation, he was in charge of base metal sales to Asia for Vale. They both joined our board, and in their respective positions, they have looked at every large undeveloped nickel deposit in the world, and they like our deposit. So I find that quite validating. These are high-profile guys. Martin Vidra, in turn, brought me a gentleman named Lyle Tritton. Lyle spent 25 years at Sherritt. Martin described him as the most talented technical guy he's ever met, a chemical engineer by training. Sherritt hired him right out of university. He spent 25 years at Sherritt and retired 2 or 3 months ago and came to work with us. So he is now at the center of our technical effort. All of the geologists, the metallurgists, and the mining engineers report to him, and he's coordinating all of that. Takes a tremendous load off me, which is fantastic because he's doing something that I'm frankly not qualified to do. I'm not technical.
Right.
But it's very comforting to me that Lyle is now in charge of that effort.
So that's fantastic. So Lyle's the guy with boots on the ground, supported ably by Martin, and at the end of a phone call, I guess.
Absolutely, yeah.
And
so
I was about to say the same with Bob Morris. I mean, he's Vale, the world's largest company, or one of the world's largest companies. Is he hands-on, or is he again just advisory?
Well, he's more advisory. However, if you're trying to develop a mine, it starts with what can you produce? What is your product? And what is the appetite out there in the world for your product? And the advice of both Martin and Bob has been invaluable as we focus our technical effort on what can we produce here? What can we make that they're going to want? And it's really crucial. So one of the strengths of this project is that we can make a beautifully clean concentrate in the range of 20 to 25% nickel.
Right.
And the nickel to cobalt ratio quite consistently in our concentrate is 18-1. So it's a nickel cobalt concentrate.
Yeah.
With deleterious elements, in many cases, that are undetectable. It's remarkably clean.
Right.
And so this is a product that the traditional smelters would compete over. But there's also an emerging market that we're paying attention to. You can take our high-grade, clean sulphide concentrate, put it through a pressure oxidation circuit, and make sulfates, which are the very high purity precursors to cathode materials for batteries. What's done now is you take concentrate all the way to briquettes or metal, and then you grind them up, hit them with acid, and take them backwards to sulfate. So it's a very inefficient processing route. But that's what's being done. And in fact, there's quite a shortage of briquettes right now. You'd rather do briquettes than metal.
So again, just help me so I understand. Because you're obviously at 19 million market cap, you're fairly early stage. You've got as you've already said, you measured and indicated is 5.2 billion pounds of nickel and 313 pounds of cobalt. It's a big resource,
yes,
for sure.
Yes.
And you're talking to me about the, how clean the concentrate grading is. But have you got any sense yet of? Because I think you're using a PEA from 2011. Has that been updated?
Right.
No, it hasn't been
updated.
We're
working on updating that.
Okay. Have you got any sense of what the recovery rates are for the project?
Around 60%.
60%.
Which if you're coming from the copper or the gold world, sounds abysmal. But when you're in the low-grade, open-pittable sulfide nickel world, that's actually excellent. That compares, one of the comparables is the Dumont deposit of Royal Nickel.
Yeah.
Their recoveries are 43%.
Yeah, you're comparable in size to them, I think, and grade. What grade are you?
They've got more drilled off than we do.
Right.
So they're actually, a larger deposit in terms of what's been drilled off. We've actually drilled off less than 25% of what's prospective for similar types of reserves. We've got drill holes 3 kilometers away from the resource that are basically the same thing as what's in the resource.
Right. I feel a competition coming on.
Yes, we just can't. You can't brag about it unless you've drilled it off. So.
Well, okay. So you're looking at updating the PEA. Now the PEA is obviously it's a very loose document in the sense that it's plus a 30% accurate.
Yeah.
What else are you doing in terms of understanding what you've got? In terms of, are you going to move to a feasibility study at some point?
Oh yes. So right now we're at the trade-off study stage. Bear in mind, this deposit was put on mothballs after 2011.
Right. Why?
We had because the nickel price collapsed.
Right.
So in 2008, the nickel price collapsed, but then it bounced back.
Okay.
And in 2011, December of 2011, is when we came out with our PEA. And we used a base case nickel price of $8.50 a pound. Nickel at the time was trading at over $11 a pound. So we thought we were being conservative. So we came up with our PEA, and the price of nickel proceeded to erode to $4 a pound, which was uneconomic for this deposit. So I faced a grim choice at the time. Do I continue to dilute and spend money on this project, or do I put it on mothballs, spend as little as possible, and hang on for dear life through the bottom of the market cycle? And I chose to do the latter.
Yeah, it's very interesting when you speak to management teams about their ability to work through cycles, because cycles are inevitable, but obviously that was in quick succession there, 2008 through 2011 for sure. Clearly didn't have enough cash at the time, or didn't want to put cash into the company to keep that going. I don't know what the G&A or the burn rate was back then, but
back then it was very low. I mean, I stopped collecting a salary for several years.
Yeah.
We just cut down to a part-time CFO, a part-time corporate secretary, did no investor relations work. We pared the spending to the bone and just hung on for dear life.
Right.
We made it through the downturn barely. And then nickel started to pick up again, driven by the EV revolution. And we started being able to attract money again. And started doing work again. So we did 36 infill holes, not this last summer, but the summer before, just to lift inferred resources in the areas that we're interested in mining to indicated and measured.
Yeah.
Which means that we've done the resource drilling in the areas that we're interested in mining, that will support advancing the project to pre-feasibility and ultimately to feasibility.
Right. Okay.
And that's a huge expense in a large deposit like this.
So what's the problem here? Because the market cap's $19 million, right? You're telling me you've had it since the early 2000s, and you've mothballed it once and got through a couple of cycles, probably 3 cycles, I guess you'd argue, of trying to survive. But you've got a large resource now. Okay.
Yes.
You think you can see the end in sight. The projections for the nickel market look good in terms of the nickel price.
Yes.
The EV revolution is changing things for everyone.
Sure.
But
there you go.
Where are you now? So how much cash do you have today?
Our working capital today is about 3.8, 3.9 million Canadian.
Okay. Where does that take you to?
You asked a very interesting question earlier there.
Yeah.
What's the problem? Why are we only at a $19 million market cap? And I think the answer to that is that we are what I would describe as a monstrously large marginal resource.
And why do you
Meaning,
say marginal?
because the incentive price that we need to get this built is somewhere in the $9 to $10 a pound range.
And today's
I
price
can't be
is?
more. Pardon me.
And today's price
Today's
is?
price was $7.80 a
Right.
pound.
So you got a ways to
And
go.
I'm sorry, I think in pounds for some reason rather than metric tons. I don't know why, but I do.
Right.
And this is the type of situation that I personally love because ultra petroleum was also huge and marginal, and it exploded when gas prices took off. You see, and you see leverage in huge marginal deposits. That's what it's all about. So, at today's nickel price, our project would struggle to get built, and everybody knows that. It's no secret. So the question to me is, if this electric vehicle revolution is real, where are you going to get the class 1 nickel? Who's our competition? Where are the other large undeveloped nickel deposits in the world? I'm talking about large deposits. And the answer is most of them are limonite deposits. It's a phase of the laterite deposits. There's a lot of laterite deposits in the world. There's a lot of limonite. And limonite is processed with high pressure, high temperature acid leach. Complicated, people, huge capital expenditures, prone to technical failure, etc. And Wood Mackenzie reckons that the incentive price to build new HPAL projects is about $12 a pound nickel. Our deposit, the incentive price is $9 or $10, and we'll get more clarity on that as we get further along with our engineering study.
But it still leaves you in the same position, doesn't it? Though, you're $7. You're talking about IC leverage. Other people will say IC liability. There's that disparate, that beta between where you are and where you need to be. You've got to have a view, and you've got to persuade investors to have a view that the nickel market is heading the right way. And I think you've got a lot of macro data supporting you. Everyone's saying it's going to get there. The question is timing, and in which case, where does that leave you today? You've got $3.8 million. How do you make it through to whatever that point is?
Well, ultimately, the goal is to get to full feasibility with permits attached. So through an environmental assessment and full feasibility. And, as an arm waving estimate today, I would say that's $30 million.
Okay.
And 3 or 4 years.
Okay.
So, you're making a good point.
Yeah.
How do we get there with 3.9 million in the treasury? The answer is, that if you are an electric vehicle manufacturer or a battery manufacturer or a trading company that services those types of entities, you are very concerned about your supply chain, and particularly nickel, because there's been underinvestment in this sector because the price of nickel has been low for so long. And so you don't want to be, if you're a manufacturer of batteries or electric vehicles, you don't want to be hostage to the nickel market, which is extremely volatile. I just remind you that in 2007, nickel hit $26 a pound before collapsing to $4, rallying to 13, collapsing to 4. It's an extremely volatile commodity, and it's because it's relatively a small market. It's roughly 2 million tons a year, and so that leads to a lot of volatility. So our thesis is this: with the product that we can make, this beautiful high-grade clean concentrate, which is amenable to either smelting, but also very amenable to pressure oxidation to convert directly to sulfates. We've got a product that is extremely desirable. And our strategy is to move forward through different engineering steps. And we are talking to strategics. We're talking to electric vehicle manufacturers. We're talking to battery manufacturers about coming in at the project level to invest at the project level early to help us get to feasibility.
But you're some ways away from production, aren't you? You're 6, 7 years away. Yeah.
Yeah, I would say we're 6 or 7 years away from production.
Yeah. Okay. So there's a few things that need to happen between now and then. I'm just trying to put my investor hat on and go, right, what are the potential red flags here? So I'm thinking, right, so there's a lot of feasibility work to happen, economic studies basically, which say, can we produce this economically? And if we can, what's the price point? I think you've indicated it needs to be circa $9-10. But you won't know that until you've done a bit more work, okay? But what about things like, I noticed on your presentation, you're quite far north, right? So what's the infrastructure? How many months of the year can you work? What's the cost? Do you have to build some of this infrastructure yourself, or can you just plumb into existing setup?
Well, okay. For one thing, being that far north for an open pit mine is actually not a bad thing at all. Okay. We're not in the mountains. We're in the rolling foothills in the rain shadow of the Coast Range Mountains. And the experience with other open pit operators up there is that it's actually more efficient to mine during the winter because you're not dealing with mud. The ground is firmer.
Okay.
For exploration, it's much more expensive to do exploration in the winter, and you just don't do it because you'd have to move a lot of snow around. You can't see the ground with the snow on it. So really the exploration window is about 4 to 5 months, around the summertime. But for mining, that's not an issue. The biggest infrastructure challenge that we face is bringing in the BC Hydro line to get electricity at the industrial rate, which is very low. And one of the trade-off studies that we're doing is the CapEx, it's a CapEx versus OpEx thing.
Yeah.
If you spend the money to bring in the hydro line, that's a big CapEx. But your power costs are very low by world standard.
3-4 cents.
On the other hand, you could build your own on-site power generation with either diesel or natural gas. And your CapEx is much lower, but your OpEx is higher.
Yeah.
That's one of the trade-off studies that we're doing. In terms of other things, we don't have a railhead right nearby, so the concentrate would be trucked to the port of Stewart. But you have to appreciate that all of these factors are baked into the engineering that we've already done and will be baked into the engineering that we're doing. So instead of loading onto trains, we're filling up concentrate trucks. They're driving down to the port of Stewart, something on the order of 300 kilometers, and maybe bringing back supplies from Stewart so that they're not running empty. That's another thing that the engineers are looking at. All the moving parts are structured into the financial model. Wear and tear on the tires of the concentrate trucks, et cetera, et cetera. So yes, it's what I would call semi-remote. It's not truly remote. I mean, we've got 70 kilometers of dirt road to the paved highway that we would have to, upgrade to something that could support, concentrate trucks going back and forth all the time.
Okay. So you're having to look at the infrastructure that you're going to require. You'll bake them into the costs, and that'll give you your all-in cost or your ASIC, or how are you going to quantify this, and you get a sense of what you need to be selling at to be able to be economic, or what sort of margins you're prepared to. I noticed in there your margins are vary between the IRR 15 to 33% type numbers shown. So I appreciate that. What about, and just finishing off on just some of these potential red flags, what about the indigenous people, the local community? How do they react to what you're doing? Is this a case of job creation, or are you getting any resistance?
Well, we're fortunate in that respect. The two main groups we deal with are the Tahltan and the Cascadena. And the Tahltan control access to our property. The Cascadena are downstream, and are legitimate players for that reason.
Right.
As well as assertion of, this is our traditional territory. Well, the two traditional territories overlap at our property. So, but they're very business friendly in general. I would say the tall tan are more experienced than the Cascadena and have a very well developed system of corporate governance.
Right.
So they've done lots of deals and they're business friendly. When I go and talk to the elders in the tall tan communities, there's always 2 or 3 that are against all development, as in any community. But most of the elders encourage economic development in the territory because these are good jobs. It keeps the young people in the communities rather than going to Vancouver or Winnipeg or Toronto. It keeps them in the communities making good money, taking vacations in Hawaii, that sort of thing. And there is a history of the tall tan doing deals. The Casca are catching up rapidly. They can see, how well the tall tan are doing. The tall tan are doing extremely well financially. They really are. And the Casca are going, hey, we want in. And so their corporate governance has improved markedly in the last 10 years.
No imminent issues that you're aware of other than, the process of just working through issues. It's putting out small fires, I think someone called it.
Another strength in British Columbia is that the provincial government has a mineral tax on all mineral production in the province. And they have a policy of sharing that with the relevant First Nations. Mm-hmm. So the province takes half, I believe. I mean, there, a lot of this is confidential. This is, but roughly say the province takes half, then the other half is divvied up amongst the relevant First Nations. And in our case, we're talking about a very large mine that would have a very long mine life. It's really significant money. So you've got this carrot, so that's in addition to jobs, contracts, et cetera, et cetera. Right. And in fact, we're also helping to promote the capacity of the local First Nations. We're doing sponsorships for any students in the tall tan or the Cascadena that are studying anything related to environmental assessment, wildlife, chemistry, archaeology, etc. Okay. So if they're studying that, we will help contribute to the scholarships, and we will also hire them as we go through the environmental assessment. I think the old model of doing an environmental assessment and then saying here it is and showing it to the First Nations, that's not a strong, robust model. It's more you're more likely to succeed if the First Nations are involved with you at every step of the way.
For sure. You need that CSR program. I mean, okay, so again, coming back to a point I made earlier with regards to how long you've been on this project, and it's had a couple of starts, as it were. Yes. I mean, do you think people are just bored of this story? Why are you not getting the traction that you deserve?
Well, God, that's a good question. I'm not sure I know the answer. Sometimes I get bored with the story, believe it or not.
You can't say that. I mean, you can't say that.
Okay. Well, but I've been working on this since 2004. That's when I took over this company. Yeah. I came out of retirement to take over this company. And believe me, when nickel was sitting at $4 a pound for several years, I got a little bored. Yeah. But I always knew that we have a real asset that at some nickel price becomes economic. And again, I get back to this thesis. If you want fresh nickel supply, particularly that's capable of producing class 1 nickel, who's our competition? What price do they need? And and another element of this is when you compare us to HPEL projects, think about the environmental impact. I think ethical sourcing is going to become increasingly important here. And HPEL projects have acidic highly acidic tailing streams. Some of the projects simply dump them into the ocean.
No, I agree. I think the ethical sourcing will have a window until people start running out of stuff, and then the ethics get moved along, right? So no, I agree with you on that one. I guess for me, what I'm hearing is it's not a question of have we got nickel. You got nickel. It's and you're telling me the recovery rates are good. You're going to be able to feed into the battery market. There's a timeline here, and it's a question of financing that timeline. You've given me a number of circa $30 million, right, to take you to the next to the end point where you can start having conversations about getting debt and getting into financing for production, right? So that's the bit that interests me. So to answer the question of why should investors be thinking about Giga Metals now? What's the opportunity? I'm looking at the market cap and going, that's a low market cap for a resource of that size. That says to me the market is not sure if you can get into production. So can you?
Oh, yes, I believe so.
Right.
And there's always that wall of doubt that you face. So, as an investor, why should I buy this stock today? The answer to that is because you can very cheaply. And if your timeline is 2 or 3 or 4 years, you just look at our tiny market cap relative to the size of the deposit and think about the leverage that happens if nickel does go to $12, as Wood Mackenzie says it has to bring significant new supplies online. When you look at our financial model and you plug in $12 a pound, now again, our financial model is out of date. It's not current. It's valid. It was very good work, but we haven't factored in inflation, cost inflation, and all that sort of thing. But still, it's the only model we've got, and so you do the financial model and you take it with a grain of salt, okay? But at $12 a pound, I think our after-tax IRR is something like 29%, and our after-tax depreciated net present value at a discount rate of 8% is something on the order of 2.7 billion, 2.7 billion.
Yeah.
US.
Those are great numbers.
So you talk, basically as an investor, I would think about it as a long-term call on the price of nickel. It's got that kind of leverage.
Yeah, but here's the thing, and this is what I'd love your help with, because I like nickel. I like the nickel story.
Sure.
Is we're 35 cents today, right? Is that about right? We're about that, right?
Yes.
54 million shares out. You're going to need $30 million to kind of get you to that DFS type stage. You're going to need to raise money. You're going to dilute, right? So someone coming at 35 cents today.
We're either going to dilute our capital or our project.
Right. Okay. There's the key.
Okay. There's the key. So what we're looking for, and I don't expect this to happen tomorrow, what we're looking for is a strategic to come in and buy into, say, 20% ownership of the property with an option to increase later as you get to feasibility. And we're in the same boat as a lot of small companies. As you know, the resource space has been a horrible place to be for the last 6 years.
Yeah.
Particularly base metals of all kinds. Yeah. And so a lot of people are in the same situation as we are, where our market cap is small. We've got a big project, a lot of money to spend, and believe me, the size of the project. You look at drilling 36 holes. We spent over $4 million just doing infill drilling.
Yeah,
it's expensive. So big project.
Quick segue. How much money have you spent to date on this project? So I didn't ask you that.
Oh, it's somewhere north of $30 million. It's more than our market cap.
Wowzers. Okay, so that's happened. So okay, that's interesting. So you spent to date, and that's mostly, well, it doesn't matter how it's spent. You spent $30 million to date.
Drilling, metallurgy, et cetera, et cetera.
Yeah. So again, with my investor hat on, the way that I measure this is share price appreciation. That's how I make money. I'm
Sure.
investing in shares. The shares have got to go up, and then I make some money when I trade them in. So that's what I'm thinking about. I'm not necessarily thinking about IRR and PV. So the thing that you just said that interests me is if you're going to bring a strategic in, you said 20% is a number that you'd look to maybe give away at a project level. And maybe more as the project develops, as more money is spent on it. Because if I look at a reference you made earlier, Dumont, they're sitting with only 28% of the business today. They've given away the rest. They've had to fund the thing to get somewhere. So I guess your choice is go bust because you can't afford to do it yourself, or bring a partner in, but they're going to take their pound of flesh. Is that your strategy?
Okay, well, yeah. So it's interesting. So in 2012, I took one route, and they took a different route.
Yeah.
I said this project's way out of the money. I could see why nickel was so cheap, because the nickel pig iron, situation was happening. I could see that it was going to continue to happen, and I thought nickel was down for several years. So I decided not to spend money on the project. They forged ahead. So at the end of the day, which one was the right choice? I'm not going to criticize anyone. It's a tough choice.
Yeah.
But that's the choice I made, is I kept 100% of the project intact and waited for an upswing in commodity prices.
Right. So do you think you're going to be the beneficiary of that decision back in 2012? You're not going to have to give away as much of your business as Dumont did, and therefore dilute existing shareholders.
Exactly. I think I can get, I think / hope that I can get the money I need to get it all the way to bankable feasibility, which means you've got permits attached, building permits attached, for $30 million or so. And my goal is to raise that at the project level rather than at the equity level.
Okay, so this is a very good example. We do these videos for the benefit of retail investors, high net worths, and family offices to help them understand that the decision making by management will make or break a company as much as the commodity price itself. So that's a really nice example there of a decision you made. When is that? 7 years ago. Oh my goodness, 7 years ago.
2012. Yeah, time flies.
Right, it does. Okay, so no, I really, really appreciate that. And if I can, again, you mentioned something there which I haven't yet asked you, which is around permitting and licenses. So where are you now? What permits and licenses do you have now, and what's that roadway look like going forward? What else do you need to be getting hold of?
Okay, well, those are very good questions. Permitting, we've got an exploration permit. We haven't formally entered into the EA process yet, because we, as I said, we're right now doing trade-off studies, and so we don't yet know what our project description is, which we will then submit. You submit a project description, and then you start doing an environmental assessment around that project description. So we haven't launched that yet. The road itself, you have to have a road, and there's other users. There's a company with a deposit called Cucho Creek. I think it's called Cucho Copper is the current owner of that. They're just entering into an environmental assessment. They need the same road that we need. So, I don't see that as a major obstacle, the road itself. In terms of environmental, this is an ultramafic deposit, meaning that it's basic. Okay, so you're not going to get acid rock drainage from this deposit. It's extremely unlikely. Let me, the engineers will scream at me for saying that. It's extremely unlikely that you'll get acid rock drainage, which is one of the big environmental issues that you can have. But the other thing is, it's politics. This is Canada, okay, and that's a double-edged sword. It's anywhere in Canada, you've got a lot of big hoops to jump through with a major project to get an environmental assessment done. However, if you're successful, you've got ethically sourced material. Nobody's going to question that. In a jurisdiction with rule of law, So nobody's, no tin pot dictator is going to come and say, well, that's mine now. Thank you very much. And at the end of the day, permitting to me is politics. So we have a deposit that will not produce acid rock drainage, that is producing nickel and cobalt, materials necessary for the green revolution. And we're also funding research at the University of British Columbia into the CO2 sequestration properties of silicate tailings. This is some very interesting research because, CO2 sequestration happens constantly in nature. If you take a silicate rock, you expose it to the atmosphere, it's absorbing CO2 and converting to carbonate. It happens very slowly. Now you grind the rock up to 80 microns and spread it out and expose it to the atmosphere. It happens very quickly. And there's a professor at UBC that's been studying this for 14 or 15 years, a guy named Greg Dipple. He's been studying it all over the world with nickel deposits, but also with diamond deposits up in the Northwest Territories, also silicate tailings. And he's developed a methodology to measure how quickly the CO2 is being uptaken and converted to CO2. And we're trying to, in fact, we're working with the Climate Secretariat of British Columbia, there is such a thing, to certify his methodology so that you could then apply for carbon credits by measuring. So, from a political perspective, we're producing battery metals for the green revolution, and we're supporting research, and we already know that we're going to be sequestering CO2, and it's not capture and store. This is actually, it changes the mineral to a carbonate, which is a very benign type of mineral, environmentally, and the CO2 is locked away for hundreds of millions of years.
Fascinating.
Yes. So I just think that we've got a project that it will be easy for the politicians to get behind.
Well, yeah, but you got to take care of these things, and you got to understand how to gain advantage. Play the game, as it were. You got to play the game. Well, look, Mark, that's been fantastic. I really appreciated that introduction to our subscribers to your story. Sure. I know you've been doing it a while, but it's new to us. Sure. I think the nickel space is very, very exciting. I'd love to stay in touch and understand how I know you've got a bit of money now, but right. How you drive that strategic partner onboarding, if you can, or when you do, and at what point you start moving through the feasibility process going forward.
Well, let me give you a bit of a timeline then. What we're doing right now is metallurgy.
Yep.
So we're doing a very robust variability study.
Yep.
Where we're doing our metallurgical processes on different physical parts of the ore body and different grades, different sulfur grades, and so forth. We'll then move into optimization.
Do you want to put some timelines on this? This is what you're doing. Do you want to put some timing on this?
Yes, we're doing this right now. I think we'll be done our metallurgy by January, February.
Okay. Say Q1. Okay.
But we'll be done enough of the variability studies. That's the important part for the next PEA. We're going to have a PEA out in the first quarter of next year, and we're striving to get it out in the early part of the quarter.
Okay. Well, let's say Q1 20. Got it?
Yep. And that will contain the variability studies that we're doing right now for the metallurgy.
So that's what's new. Okay.
Yes. Now it probably won't have all of the optimization that we're doing.
Okay.
But the other result of the optimization studies is we're going to produce quite a bit of concentrate, something on the order of 5 kilograms. So in our talks with the strategics, one of our pitches to them is, okay, you want to build a gigafactory. You don't want to import sulfate because sulfate is actually dangerous cargo. It's very volatile. You've got to have insurance, et cetera, et cetera. Whereas, a sulfide concentrate is routine cargo. why not look at this as a two-part project where we produce our sulphide concentrate to these specifications, transport it to your gigafactory where you've got a pressure oxidation circuit, you make sulfates, you've got quality control right there, and you've got your nickel supply tied up at the cost of producing the nickel. So fine, I mean, this does work, but all of them want to take our concentrate and try it themselves. Put it through their own, labs, do the pressure oxidation work, see how it does.
Yeah.
So we'll be able to have 500 gram samples to ship to, up to 10 different strategics for them to do test work on. So we'll have that by, say, February. We'll have a new engineering study, and we'll be proceeding towards pre-feasibility and then feasibility.
Wow.
We're just basically doing the trade-off studies so that we can go, what is our model now? What works best today?
So when are you aiming for a PFS by?
That would be a year following the PEA.
Okay, got it. Okay, just trying to get some sort of sense when the economics start flowing in a bit more in a robust manner. Okay, beautiful. Thank you very much, Mark.
Matthew, it's a pleasure.
No,
and you have some very good questions, and they're questions that I would ask as an investor as well.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.